think last time we spoke, you were like 20,000. You're almost 28. Good stuff, man.
Who knew? All right, looks like it's going through now. I'm just gonna have to drop a new link for it really quick, but that's easy. Perfect. All right, so here's the new link. I'm gonna drop it in here, new link. And then I'll put it on X as well. And then we should be good. Yeah, that was weird. A lot of times you can pretty seamlessly run it through another like relay service, but for some reason it didn't like it. So, podcast. Cool. That'll be all right. Cool. Everybody can make their way in as they figure out their lives as I'm trying to figure out my life. It looks like everybody's fallen over to the other one, which is good. They should all have access to the new link. So we'll pivot over to this one. Beautiful, dude.
The one you just tweeted is live?
That is correct, sir. Yeah, so we're good. What's poppin', everybody? Yeah, welcome over, folks. Sorry for the last minute change. You know how that goes sometimes. Literally had it all set up. I have like a, I don't know, I'd call it like a 15% hit rate with trying to go live through Zoom. It's not the worst, but it's also not the most seamless. So we figured it out though. What's up, man?
Nothing much, man. Just enjoying the year end. What's been a good market year, strong markets, and that's about it. Just looking forward to chatting with you. It's always a pleasure.
Did you trade APP?
You know what? It's like I look back and I'm like, how did I miss APP? It's like the most perfect like setup a couple of months back.
Dude,
vertical, unbelievable.
I did you so dirty because I got in on the 11th of September and I used options on it.
Okay.
And I literally think it might be one of my biggest trades, definitely for the year, but it like might be a multi-year period for me. Because when I got in, it was sub 100. It was like 98. And then I got out when it was like 4. I forgot what it got up to. But as you know, that's not my style of trading at all. So like I didn't deserve that in the least. It just kind of like randomly.
You came to outdo me in my style of trading. Is that it? Is that what you're trying to kick this off with?
What I'm trying to say, there's no chance I ever could, but I'm telling you, every once in a while, a blind squirrel does find a nut. And it was so funny because when I was putting on the trade, dude, I was like, I saw volume expand massive. Actually, I'll pull up a chart really quick because it's kind of interesting now that I look at it, because honestly, I'm actually really surprised that this wasn't your bag. This seems like the exact kind of thing that you would find your way into. Yeah. But yeah, I had originally gotten in here and it was for 2 very simple reasons. The first one is it started to break out and it was on crazy volume. I didn't know why. And I did zero research. I didn't know anything about the earnings. I didn't even know what the company did when I bought it, as you know, people in my field tend to do. Know nothing about what we do. It's whenever I talk to my wife about like what I do as a trader, I literally tell her I just look at like colors on a screen, and if I like the colors, I'll do something. If I don't like the colors, I don't do anything. And that's about my existence. But yeah. That was a funny entry. Now, out of curiosity, though, with your general approach, maybe TradingView, maybe I should pull that up because this is obviously all messed up from the scale. But where in this would your typical entry window be?
No, I mean, you nailed it perfectly. The reason I kind of slipped on this one is just because like a good market will have so many nice setups coming your way. So there's a lot of stuff I was building into at that time.
I see.
And so sometimes, you already got like a foolish portfolio, and it's like, to be honest, like now looking back, it's like a home run trade. Sometimes, like a lot of people, like I'll tell them, it's like, you don't always know. You're buying 5, 6, 10 stocks. You don't really know the one that's going to pull off something like this. It's kind of like it's the right environment. You're looking at the right setups, and sometimes your plate's pretty full. And so it's just like, for that reason, you're not just like constantly forever extending yourself. So, I mean, like the way you did it was like the classic setup. I mean, it was perfect. And especially, that is the quintessential move is when like you can't buy a stock. Like I mean, like it took off. If you were waiting at any in any way, if you even just flinched and said, "I'm going to wait for a pullback," I'll wait for the volatility to die down. I'll wait for it to go side. It just never stopped. So it's like the stocks that you can't buy are the stocks that you should buy. It's a perfect example. What a move! Beautiful.
What a great way to phrase that, by the way. Because I've not heard that before, and I don't know if that's something you say a lot, but if not, you should, because the statement of the stocks that you can't buy or the stocks that you should buy, like that's a great way to frame it. And I imagine for a lot of traders that does take a while to get used to, is like buying stuff high and then trying to sell it higher. That's very, very counterintuitive.
And
But
even for like myself, like sometimes it's like you know it to be true, but then after other times it's like because at the same you're always trying to balance, right? Which is that leading stock, but also you want to avoid buying things that are extended. Even good stocks could kind of come up, pull back against you. So especially when things are starting to kick off, and it's like you have to remind yourself, like because there's the other setups that will look more timely, like oh this one hasn't gone yet. There's like this. I think it's a natural built-in emotion we have from life, like looking for a deal or a discount or what. So it's like you have to remind, no, like just buy the one you couldn't buy. Just find a way, even if it's more expensive, buy that one. And 9 times out of 10, that's the one that just keeps going. It's crazy. I mean, how long have people been saying Palantir is overvalued, and it's just like it just tripled again, like so you never quite know.
so really fun story about Palantir. I recently did it was a video actually, I think about Palantir. It was about Palantir, maybe SoFi, maybe both of them. And there was a bunch of people on Seeking Alpha that were talking about how it's, no good at this point. It's already overextended, like all that kind of stuff. And I obviously can't help but just find that comical, that exactly to your point, stuff that's like that tends to keep being like that. Like, well, it just keeps going, dude. So whatever. That's about all you really need, I think. Another question about that stock as I was looking at it out of sheer curiosity. I was using the 10 and the 20 to essentially follow the trend. Now, a lot of other times that I do that for breakout style trades and kind of momentum following at that point, I find that you really can't take the rules super strictly. Otherwise, you get chopped out a lot. And I noticed that in this case as well. So when you're trying to follow, let's say that you find a good entry on something like this, what's your approach to follow the trend as it's unfolding without getting dumped out?
So I try and this like really was from William O'Neill. He kind of brought up the concept, but it's slowly just taken over my process. But he had like this thing called the hold rule. So if the stock goes up like so much, like 20% within the first 3 weeks, is something you want to hold on to, or that's kind of like the basics of it. But for me, like the way it's grown over time is if the stock is just very strong, it's one of my best stocks. I just don't want to sell it for the first 2 or 3 weeks because there's always going to be a pause. There's going to be a pullback. Like I'll always rather manage risk with the stocks that are not going up. Because that's a typical thing, right? It'll pull back to a 10, you say it closes below it, you exit, and then it just kind of keeps rocketing higher 3 days later. So
Yep.
I found that coming out of a base, coming out of a structure, the first 2, 3, 4 weeks is really when the stock is showing what it's got. Like if it's something that's worthwhile holding, if it's worth watching. So I have a bit of like a time clock going on. Like I just, as long as I'm not losing money on a stock, like for the first couple of weeks, unless it's like now there's a really great market. Like if a stock is not doing anything, I'll maybe just roll it into something else because there's so much heat. But like back in September, markets were just like coming out of a bit of a slumber, and like all the stocks were starting to move. So whenever you're at the beginning of like that cycle, I find markets go like these 3, 4, 5 month cycles. Like that first 2, 3, 4 weeks, I just want to like leave it alone. I just don't want to touch it. So that's usually my problem, and I find that super helpful because by that time, like APP, like those first 3, 4, 5 days, the impulse would have been so strong to like, we went from 87 to 125. Like the impulse is so strong to take your profit. And so you just need kind of like this mindset where like, no, let's just don't touch it now. Like whatever it is, I'm expecting higher. And same with Palantir, same with GEV, so many others this year that I did trade. Yeah, ALAB recently. It's the amazing thing about these kind of markets. So like the time's an important consideration.
And your average holding duration, maybe for this year on some of those names, what's your holding duration?
So for me, it's almost like I have like a split personality. Like if I give you the average, it's not like a proper representation. So there's
Yep.
probably stocks where like the average holding period is like 4 days. Some are a couple of days they get stopped, some are like a week and a half they get stopped. So like those are the stocks that are like the underperformers. And after the ones that do work, like that's a different crowd. That's usually like 2 to 4 months. So let's say you average 3. So there's kind of it's
Now,
like if you look at the trades, it's like split on the two sides.
and I was going to ask, so like, is a percentage of trades, is it like 50-50-ish, or
I
is it
wish
like
because the ones that you're holding
20-80?
4 months are usually the rock star moves, but it's probably like closer to like a 35-65 or something like that for a 30-70. Depends how good the market. Like in hot markets, it could be near 50-50 or even better. In bad markets, it's like it could be 20-80 for a little bit. So it depends. It depends what the market is.
And when you're prospecting to enter your trades, I know that you obviously follow an adapted version of CanSlim that you've built and refined over time. One of the things I find so fascinating about CanSlim is that it is a lot of fundamentals that they look at, obviously overlay with technical for timing. But then if you're talking about like a quarter long holding duration, that seems like a shorter window for like fundamentals to fully be reflected. So can you talk about that relationship a little bit?
Well, see, so like what I find, like if you could, like the ultimate moves for most of these big winners, and the same thing like William O'Neill speaking at CanSlim or anyone who does this style, like the majority of the full moves of these stocks are let's say 18 months. That's an average full cycle for a stock to do its entire move. The thing is though, normally you'll have like a 3 to 5 month really hot run, then you'll have like a correction, and the corrections can be 15%, they can be 35%. So depending on how, like because I'm a more aggressive trader, I'm very concentrated, I tend to be on margin. Like you don't want to sit through a 35% correction like on heavy margins. It's very, very painful. So if I do sit with some stocks, it'll be like the few. Most I'm looking to kind of capitalize on those individual legs. It's almost like, like the different quarters of a football game or something like that. You can think of it. So it's like I try after each quarter like to then reassess like who do I want to stay in or just move to cash and then look to kind of rebuild and do it again. So like that's what works for me with my personality. Like I always tell people, like it can be the best strategy in the world. If it doesn't mix with your personality, it won't work. So that's how I found it to be helpful.
I literally say the same thing all the time. Literally the same thing, because it's that exact note is like the definition of square peg round hole. And there was actually a post I came across on Reddit not too long ago. I like to post on there once in a while. And there was somebody that was in like the day trading subreddit, and they were like, the silliest thing, dude. They were like, I'm so good at swing trading, but I want to be a day trader so bad.
Why? I don't know why. Why do you want to torture yourself? You can.
Dude, the first thing I thought was just like, how stupid is this? That like you're just worried about a label. Swing trade every day. Now you're a day trader. Like who gives a fuck what the label is, bro? Just do what works. Exactly to your broader point of find what gels with you. Now you mentioned something there that drew my interest about the use of margin, and it begs the natural question: why use margin when you can use option? And you'll get.
So I've like, I think you're slowly seeping into my brain. I've been
I'm
using
trying to
options
fucking
more and
wear you
more.
down, bro.
You're wearing me down. No, like I've been really working on again. I like to get concentrated. I like to be aggressive. It's just my natural thing. If I think markets are hot, if I have 20% cash, I'm kicking. If I'm only 120% invested, I'm upset at myself. Like I want to be aggressive. But when you start getting to like that 150, 200% invested, the volatility is wild. So the thing is with options that they're less liquid, they expire. You're paying like the implied volatility all the time is a draw. So like what I like to do, what I've begun doing, is I'll get really really heavy. But when I have indicators that like will show me that we're stretched in the short term, I'll start to kind of buy some, let's say 2-3 week put options, a little bit out of the money so the cost is not too much. Because again, kind of like I was saying before, sometimes the corrections are 10%, and I'm like, okay, that's cool. No, it's not a big deal. Sometimes they're 30%, or there could be a downgrade. all these growth stocks, like analysts love to downgrade them, and it's like they get these big, massive hits out of nowhere. So I've started to incorporate them more and more to kind of just to smooth out the equity curve. But like, so the way I kind of use it, so basically, once you're running up, it's probably different than how you would do it, but like the way I look at it is like I want to be totally long. I want the full delta going up, but then once I get like at an extended point, then I just want to be like in a call option. Like I want to take more upside. So basically, stock with a put, you're like a synthetic call basically.
Yep.
So like I just want to I still want to be long, but I don't want all the downside anymore. So I start to flip that in. And what's cool is like, let's say it does correct and you like the stock and it pulls back normally. Well, yeah, you're protected from that put that you bought cheaply, but also now you can start like actually buying more stock on that pullback comfortably because there's like your big position is already hedged out. So it's actually allowed me to, like I've been doing it on Tesla, this leg up, and it's allowed me to build a monster position. And I never really took on like any additional risk than I would normally, but like that put hedging strategy along the way worked out great.
Yeah, that's awesome. I love that for you. Yeah. And your point about liquidity and what offers, that's genuinely one of the answers I was expecting to hear from you, even though you didn't explicitly say it, you still kind of implicitly said it, where a lot of the stuff that I imagine you might trade may or may not even have options because
Yeah,
a
it could be
lot,
like maybe they just have quarterlies. I mean, some are super like now I'm like I said, I'm trading Tesla, I have a position in
Tesla, of
Google. Like,
course.
those are great.
Yeah.
Yeah, no, not a problem at all. But if it's a young IPO, I mean, what's the volatility they're pricing in, and how liquid is it, and how far out? So a lot of times it's just, and then it's like it's on the breakout. If the breakout fails, then you're trying to roll out of these illiquid options, and it becomes a bit tricky. So I like to build the position up, and then when it's going my way, I can take my time to hedge like where I want and kind of smooth out the equity curve. So it's a different approach, I guess.
Yeah, very, very. And that's one of the reasons why I love doing these, right? It's a chance not just for you and I to bullshit and share some different ideas, but it's also for people to hear different ideas. Cause yeah, I find that's a big filter that I apply. I don't only trade options. I absolutely will use the underlying itself if it's something that looks really, really good. And I feel like that's the only way reasonably to gain entry. But yeah, even stuff that has decent liquidity, I find that there's a really big balance between how far out in time you go to decrease your daily theta, even though there's a higher gross theta. You kind of have to strike a balance because if you go out too far, then you are giving up more and more liquidity, which is a problem.
Yeah.
So I can totally see that. One of the other things I noticed though with the breakout style of trading, I've used it way more this year than the past few years because I keep a pretty detailed log and I can see like I'm always prospecting, but I can start to see like what's catching and it's like, okay, this is actually starting to really move the needle a bit. One of the things I noticed though is I wanted to pick your brain on the timing of entry. Obviously, that's the name of the game, right? Like that's the difficult part. And I find I have no problem entering on a breakout. If it fails, take the exit, whatever the defined exit is, typically shortly below wherever the lows were right before the breakout, the consolidation phase. And if it starts breaking out again, then I'll just get right back in. Like I really don't have any problem with that at all. Is that something you do?
So I used to do more of that. Like the example of APP you showed, like that is the textbook example of like what William O'Neill would show in his books. Like that's the reason why you would use a breakout strategy because it's not doing much of anything, then boom, breaks out and it's gone. I found that, I think it's because of HFTs and algos, which have become more and more powerful. That's more and more rare to see. You don't
Yes.
see it that way so often. Like
Yes.
typically, the big move happens like before the breakout, then you coming back in. So I rarely, like unless it's like something like an APP, like I have a much stronger filter. Like that day the volume was huge, so like that was like you need to have something that will make that day seem better because or else there's so many fake breakouts that even like, oh, I'll get out, I'll get back in, like well, that can get real costly because those reversals are fast. And you can tell like if you're buying that breakout and it's up 6% and all of a sudden it's up 4, 3, 2, you're like, oh, that was totally a machine. And like you just know it. Now I'm getting out, everyone's getting out at the same time, the spreads widen, it gets, and it's like, then you feel like a dolt, So like I typically like to start building into a position. So if I like the way the chart looks, like I'm building it usually prior to the breakout a little bit. And then if it does have a big powerful move, maybe I'll add a little, but I want to see a close up there. And then typically the next couple of days, I'm looking for kind of backfill or consolidation pause. So like APP is an example, like again, I already had a pretty full plate at that point, but even if not, if I would have missed that initial breakout, like it's hard to chase. It's up 2, 3 days in a row. Most don't have that straightaway type of move. There's a lot of backfill. So I prefer the backfill. I prefer like the pre-breakout. I actually almost prefer everything but the breakout nowadays because I find it's. I mean, again, there's a logical argument for it because that's like hey, the stock's finally going, but the machines have become very powerful and they've read the books too. They can see the retail flow, not just retail, even pro flow come in on breakouts and it's like there's such an incentive to like push and fade. If they can push enough liquidity to fade it, just that 8%, they know all the stops will trigger and then they cover those shorts and then they can get long and take it up a second time. So over a course of like a few hours or a couple of days, like that's quite a profit you can do on size if you have the capability to pull it off. So that's why I don't do the breakouts as much as people would think I do.
Yeah, so it sounds like you're almost trying to front run them a little bit and then
Yeah, front runner, wait for the confirmation. I'd rather pay a little bit higher and then build in
right.
after than like try and go with the stop order. Like you miss something like an APP sometimes. That's a real hard one to miss, but a lot of times it's like it gets very and this is a good market. Like and then a choppy market, it's like 10x the chop. Like then everything's failing, so it can get tricky.
Yeah, that leads to the follow-on actually is that I've even noticed in the last couple weeks that stuff seems to have slowed down, not a ton, but I'm not seeing as many things that are popping up that are looking quite as promising.
Mhm.
Have you seen that, or are you just looking at different stuff?
Well, I think it's because most stocks have been correcting. Like if you look at and not just like the small caps, but even if you look at like the S&P 500, the SPY versus the RSP. RSP is like equal weights at S&P 500. Like it's still
Hmm.
like large cap index, but it's been literally falling for I think 10 or 11 straight sessions. Whereas the QQQ looks great. So it's been like the past couple of weeks have actually been okay if you were in just the right names. There was like a few like real. There's been there's a couple of main themes that have been powerhouses. Everything else has been kind of consolidating. I think it's rotationary. Like I think this market's really strong. I think there's like massive tailwinds. Like I think the AI revolution is gonna like people are talking Tesla. Like Tesla's an AI revolution because I mean autonomous driving is an AI answer that's now being accelerated. So and it's really a U.S. centric development. Like there's no other country that has any kind of. I was just to Alex Karp, the Palantir CEO. It's like he was even saying that there's no country that has the technology, the energy capacity, the intellectual like know-how how to put this together, and it's a revolutionary approach to how we do everything. So like I think this is such a strong market. I think we're getting rotations like Broadcom, like the semiconductors have been dead. Now suddenly Broadcom had a big move on Friday. And so like now those are going to take a pause, and then I bet the way I'm positioned, either Santa Claus rally and small mid caps are going to rip all of a sudden, and people will be like, oh, the ones that were quiet are suddenly going. So I think it's rotationary.
Speaking of that, what's been going on with small caps? They're like, I don't get it. Like everybody else is partying right now. Small caps, it looks like they're going to get their cut this month. And
Mm.
they're just like, what are they doing? What's their problem?
I think it's just like I mean, in the market world, we forget about like the real economy a lot of times, but like like there's the haves like of like all the great companies, the Googles, Metas, Tesla, where their cost of capital is super cheap. Like the demand for their product, people are addicted to social media. No one's getting off Meta just because of like they're having a hard time at work. Like everyone's on all this stuff anyway. So for them, it's like whatever. But for small caps, like like the impact of inflation on margins and like maybe a bit of a like slower economy than people wanted like that has a real so they're not really screaming it. I think there's going to be a catch up when rates finally come down, and also I think they thought rates were going to fall quicker than they are, and they're not because the Fed's being a little more conservative here. So it's like always kind of like they promise the gift and they kind of pull it back. So like at some point they'll get a massive tailwind. There'll be some outperformance, but at the same time, as an institution, it's usually you go to a small cap for high growth, and that's the way I usually think. Small, even I prefer mid caps. But you're looking suddenly at something like a Tesla or a Google or
Right.
whatever. Like you're going to revolutionize like autonomous. Like think of all
Yeah.
the impact of autonomous. So you get all the liquidity of a $1 trillion company with the same growth rates or higher than a small cap with the cost of capital of established. So it's like kind of the usual pull to smalls are not there.
Yeah, yeah. Because I've been obviously playing a couple thematic moves in the Russell just because of expectations on when the rate cut would find its way in. And I think we saw some of that, what was it, in like July, fell back. Then we saw some of it in October. I think it was like late October. There was another pop. Been like really, really, I don't know. It's definitely had some big moves, but it's also been pulling back way more than I would have expected.
It's been a while. It's been a while.
Yeah, yeah,
Rare, kind of rare to see.
yeah, because I feel like they could like totally understand the consolidations, especially on something like this, but it's almost like erratic. And
Yeah.
I can't quite put my finger on the pricing methodology that's going on there. Like I can't, because it, to me, to cause those moves, you need big institutional participation of some sort. But it's hard for me to think that there's institutions that are getting in like the beginning of July, and then 2 weeks later they're like, ah, nah, never mind, this is all bad, let me get completely out, and then it reverts back to where it was before. It confounds me.
The only thing that made sense to me is I think there's been a big trade on where it's like your long large caps, short small caps, like a market neutral approach. And every time
Mhm.
there's like the hope of more aggressive rate cuts, which is more bullish in short term, like in theory, small caps, it's like that trade goes in reverse. Like there was one point this was it this summer where it's like literally the QQQ and the Russell were trading completely inversely to each other. Like it
Yeah.
was just like if the Russell was up 2%, the Qs were down 1%, and vice versa. So I think that trade got pushed to the every few years there's like a trade that takes over. It was the carry trade at one point. There's always like a trade that takes over that all the institutions, like everyone thinks the hedge fund guys are like these geniuses, but a lot of them all have some drinks at night. You're doing that kind of a trade, yeah? And suddenly everyone has the same trade on because it's making money. So I think everyone gets on one side of the trade. And so you're seeing basically all those pops are the fear moments where, oh, I gotta get out of this trade. And the small caps are less liquid. So it's like they're all trying to do it at the same time and then it's put back on. So I think you're just seeing the equity curve of like the guys who are putting on this long short triple Qs or Russell or whatever. And that's the only thing to me that explains it. Because overall, the advance, if you just look at, let's say, a 50-day moving average, it's up to
Right.
the right. But the moves are like you're up 12%, you're down
Crazy.
10%, you're up, which doesn't make any sense. So it's definitely some kind of liquidity driven strategy, move that's coming off and on.
Yeah, and that's the part that I find so fascinating by, because I was looking at it for a little while, and like the Russell was flat for a long, long part, and then all of a sudden it was starting to catch up to the S&P 500. They weren't that far apart; they were like 5-6 points apart,
Yeah.
and then they've obviously decoupled now, where SPY's up almost like 30%,
Yeah.
and Russell's like sub 20 still.
hmm Yeah, that's
Yeah,
why. So I think I have a feeling going into year end, you'll probably get like a catch up move. So we'll see what happens. But it's been wild to see. I agree. And if that's a perfect example. If you're a breakout trader, like that's a painful advance. You look back and it still had
oh
a good
yeah,
advance, but you're saying, what? I just lost money the entire time. I bought it when it was up 10%, and it fell down. And it's like you want to like hit something, but that's why I see a bit of balance on the entries and whatnot. But it's definitely been a wild chart for sure.
yeah, and well, your comment on the breakout trading, Mike, makes a lot of sense, because I couldn't imagine that being like the thing somebody does, because I feel like if that's the only thing somebody does, you just have to be a glutton for punishment. You just have to be okay getting kicked in the shin over and over again until you get your couple home runs. Like anytime I run the strategies, it's like the win rate is typically okay. It'll still hover around like 60%, which is a decent win rate. Um, but there's still a lot of losing trades. 40% of trades losing is not good.
Yeah, no,
But
you know what? It's because I think it goes back to, like I said before, markets were so much simpler. Like people didn't have the knowledge that they had. So a lot of these strategies, like I mean, William O'Neill started trading in the 50s, the 1950s. You know what I mean? So it's like back then you sent your order to the floor, a guy went to the post, he bought the stock. Like it wasn't algorithms like moving this and that. So it was different. If the stock had not gone anywhere for a while and then suddenly it would go to new highs on a bit of volume, probably it was an insider buying or someone who knew something about the company. Like it was very meaningful, like immediate information. Now, it's easy to teach. It's a very teachable strategy. You wait until it's in a base, and then after, if it breaks the new highs, that means people want it. And logically, it is correct.
right.
But markets are pretty efficient. I always say that, they say it's not perfectly efficient, but it's pretty efficient.
Pretty
So,
efficient.
so like the machines did their math, say, hey, like you have these people who run in on this idea and then run out, and you've been doing this so long. Every cycle, there's new people who come and learn, and they learn the basics first, and it takes time to realize it's not that easy. So
Yeah, yeah. This past year has been really interesting just because it's led me to lean into some of the other kinds of approaches that had got a little dusty that I hadn't necessarily been using a lot. A lot of the stuff before that was really, really focused on volatility and because it was everywhere.
mhm.
Now, when you look back over 2024, what are some of the primary themes that stuck out to you? Not the obvious ones, not the high interest rate environment and stuff like that. What were some of the themes that you picked up this year that were more novel, that you're like, oh, this is kind of a new thing I'm seeing?
In terms of actual stock themes or like investing process.
Whatever makes you happy.
Well, sometimes it's interesting. Like one thing I thought that was going to be stronger was cybersecurity. Like you would think with the AI revolution
Interesting.
that there'd be an added emphasis on like stopping fakes and this and that. And so that was like an early uh, theme I was putting on early in the year that didn't kind of like come to fruition. It's a bit of like you look back, it's like oh, it's like wasted time. Like there was other things that were working better. So this year was tricky in the sense that there was a lot of rotations in themes. So the semiconductors were red hot, and then like look at AMD now, like it's awful. I mean, like terrible. But at the same time, like Broadcom is now blasting off. So it's like a lot of stocks in the end did generally well, but if you were in the wrong place at the wrong time, it still could have been very painful for you. So there's a lot of like that rotational themes that would come in, which is pretty normal. Like most markets will have that. Uh, what I think again, like well, my kind of like base case that I've been trying to follow is like the internet rollout, the '90s, where it wasn't just people making mainframe computers that dominated it was first there was like routers and switches and ethernet cables, then that went to internet portals, then it went to browsers, and then it went to mobile phones. So it's like everything built on itself. So if you just kind of
Right.
sat back, like the Nasdaq kept going up, but if you sat back in that original theme saying like that's it, these are the guys who are gonna lay the foundation for everything. Well, once they got fully priced, like the market went on to like what was gonna come next and next and next and next. So that's kind of what I was expecting. It's not always easy to catch, even if you're expecting it, because I mean you don't really know. Like it's all new technology. Like looking back, it's easy to study. In real time, it's like sometimes I look at these companies and I spend 20 minutes and I'm like, what do they do? Like, what is this contraption that they have? So. But like that's the way you have to think. So I think it's typical, but it's never easy. But definitely like I think looking at it from the lens of how the internet rolled out, like throughout, and how like there's reverberations through different industries and how the industry itself grew. I think that's the right way. So I think it was to the point, but yeah, that's kind of I think the themes that came out were just always trying to understand what's going to come next, and how it's going to be the next player.
I think your point on semiconductors is massive because I think that caught a lot of us off guard. The fact that they've hailed off literally as a sector quite as hard as it did. And that also seems, I can't fully tell what that's driven by because it's not like demand for semiconductors is going to go away. Even now that we're talking about just more computing being required for everything beyond AI, but now we have this new emergence of quantum computing with Willow and Google that's been,
Yeah.
worked on for 12 years. Now that's starting to gain some traction. So when you think about a sector like semiconductors, what are your thoughts on it? Do you think that this is just profit taking for people that are got in super low, Scrooge McDucking it, swimming in gold coins, or like it just seems like the demand isn't actually contracting that?
It goes back to your other question, like we were saying, like how long do you stay in these stocks? Because the market exaggerates the way up and it exaggerates the way down. So like when you're on the way up, like for example now Palantir, like I had a great trade in Palantir. I got in like
Mm-hmm.
high 20s, I exited like in the 70s, which was a great trade. But like even I have some clients saying like, why are you selling Palantir? Well, like look, it is trading like at 65 times sales. Like I always say, like, I wish I could start any company and sell it at 65 times just my sales for the year. Like I'll sell it year one, it's gone. Like think about it. Like 65 years from now, I'll be dead. I can get all of those sales like done now. Like that value. So the thing is like I love I think Palantir is in such a unique spot, like in the AI ecosystem. But like, look, I mean, the market will just get ahead of itself on the way up. Then it has to. So at some point, like Palantir is gonna correct or make a base, and it'll be it'll work again. But also sometimes, like with the semis, when it's new technology, like stuff's moving so quickly. Sometimes it's like someone is run over. Like AMD, even though it's a big player, you can say like, well, like maybe people thought that their chip was going to be competitive, they'll be able to do something competitive, and maybe they can't. So from having look at Intel, Intel's sucks after all these years when it was a kingpin. So that's why like I like to kind of sell in those 4 or 5 month cycles when I can, and then after you always reassess on every pullback because the pullbacks are normal, they're not broken, the stocks, but at the same time, sometimes the stocks that you thought were going to be winners, you find out weren't. In fact, sometimes even though they're in the industry of where the heat is, they get run over by the new entrants. I mean, I think I look at BlackBerry. I mean, you could have said like mobile phones are going to be the future 15 years ago or 20 years ago, and like you're bang on right. But Apple destroyed them. So if you just sat there saying like, oh, it's got to be, come on, BlackBerry's still a mobile phone. Yeah, but they got completely run over by Android and Apple. So I think that's what's going on with semis. Like I agree. Like I mean, look at Broadcom, big move up. Like Taiwan Semi. Like, but now does quantum computing change anything? I doubt in the short term if you kind of look into it. But there's so much stuff coming down the pipe. It's like, especially as an investor, we tend to be generalists. Like I mean. Like I was saying it half jokingly, but it's true. Like do you personally understand the difference between, an Intel chip or an AMD chip and an NVIDIA chip, like really down to what makes one so much better than the other? Like sometimes it's hard to understand what these guys even do, So that's the way I look at it. And that's why, those drops doesn't ruin the stock, but it does give you a chance. That's why relative strength to me is so important, because the stock that just drops the least, you don't even have to know, is that chip better? The market's telling you that chip is better. If AMD is down 50% and XYZ stock is down 15% and they're both in the same group, like go with XYZ like stock. Like they won't sell that stock for a reason. Like the people who do know, the people who do make the semis, or the institutions where they're specialists in semiconductors, like they know AMD is going to be beat and this one's going to be the winner. So that's why to me relative strength is so critical, especially on pullbacks.
It's a great way to phrase it. When you see all these new policies coming out from our boy Trump, he's out there heckling, slinging tariffs. The comedy show is back. It's awesome. Anytime I have a chance to listen to that dude talk, there's a 0% chance I miss it because it's freaking hilarious. He always comes up with something that you just don't expect.
So on the trading desk, we had a clip from him when he was running like the first time, saying he's like, we're going to win so much. You're going to say, Mr. President, please stop winning. I'm going to say, no, we need to win more. So every time we were having a good trading day, we would like have that clip on and we'd all be laughing together. Sorry, anyway, didn't mean to cut off your train of thought.
No, that's like the exact kind of thing I'm talking about. So with that back, in terms of introducing policy and stuff, it seems like there's a lot of new changes coming down the pike. We're seeing deregulation likely in the financial sector. We're seeing oil and gas probably coming back into vogue. We're seeing EV credits probably going away. Like a lot of things I see that really stick out to me. But what are your thoughts? And I always love listening to a Canadian talk about this stuff, because I have to be honest, I don't know shit about what your prime minister has talked about recently. But everybody knows what's going on with Trump.
He doesn't know what he's been talking about ever. So it's okay. Don't worry about it. Whatever, if ever you're unhappy with your politicians, you can look at Justin Trudeau and feel good about yourself all of a sudden. But no, I mean, look, it's in a set of winners and losers. What I really like about like Trump, the return of the Trump, is that like I think especially having like a guy like Elon Musk, which I mean, even sometimes some people. Like my brother-in-law's he teaches finance at a university, and his colleague is like on the other side of the political spectrum. Like she really just doesn't like Musk and Trump and all that. And so she's like, Musk is not even that good of a businessman. And he was like, come on, like he's maybe possibly very likely the best businessman who ever like even if you don't like his politics, right. You can't say he's a bad business person. I mean, he's in his 50s, and he's like probably gonna be the first trillionaire. Anyways. So what I like about like Trump version 2 better than 1 is I think there's better economic guidance. I think Musk is going to play that role. I think Musk realizes, I think for his own ambitions, that like, even for autonomous driving and the rest and everything else, like space
Going to
launches,
Mars and shit.
going to Mars and whatever other crazy ideas he has that he's not even articulating, like you need the
Isn't
right
that a
kind
thought?
of framework. Sorry?
Isn't that a thought? I sorry to cut you off. That just really struck me. The fact that like he's talking about fucking colonizing Mars, which is kind of crazy. And your comment that you just said of even the ideas that he's not articulating.
Yeah.
That's crazy. We have a dude that's openly talking about colonizing Mars, and then that begs the question: what else is going on in the brain? That's nuts. Sorry, that
Well,
just
but to be fair though, with Musk, like so much of what he's doing, which is to me is amazing. It's like if you watch his old clips, like I love to study people, it's like he said so much of it like 25 years ago. Like I want to, like after he sold PayPal and he had the
yes.
money, it's like, I'm gonna build this, I'm gonna build this, and it's like wild that like any of that even happened. Never mind all of it, pretty much. You know what I mean? So anyway, so for round two, I think at least the hope is, like that it's gonna be more thoughtfully implemented. Everyone's scared of the tariffs, but I mean, like, with the right team, like, look, a tariff can be, if you have a domestic alternative, a tariff doesn't necessarily like hurt your domestic economy very much. If you don't have a domestic alternative, well, yeah, then the whole cost of the tariff basically gets passed on to the consumer. So, like, I mean, I don't think it's gonna be like blanket tariffs and all the rest. So, like, I'm more optimistic that it's a pro-business climate, that it's a deregulation climate. If you look at any country in the world, like I always tell people, like it's in that sense, I'm the least racist person in the world. I always tell people it's like everyone can have incredible success. Like China was horrible in the 90s. They started these free market small cities and they boomed. Like East West Germany. West Germany was amazing. East Germany was terrible because one was communist, one was cap. So it's like, like just get those foundations there. It's not going to be perfect, but moving towards free market capitalist deregulated ideas, there's going to be bumps in every sense, but you'll have a much, much better outcome, especially when you mix that with like technological breakthroughs like AI. I don't know. I'm personally very hopeful for the next, and not just because of Trump. I think just because everything is just going in a better direction that's more pro business. And pro business means, I'm someone who believes in, I'd rather have a bigger pie for everyone's share than a smaller pie, and we're all fighting each other to cut that up in a different way. So I think bumps or not, like I think overall it's going to be rock and roll. Especially tie that with AI and all the rest, it's going to be some amazing opportunities. Amazing.
Do you see any specific sectors or industry that you expect to suck over the next 2 years, or within whatever time frame? Just a reference period.
I think anyone who relies on like big government spending, like like even though like Trump is very like pro military and all the rest, like you have a guy like Musk, like he was just joking recently, like why are people still designing and building like F-35, like jets when drones are the future? I think it's gonna like if you're an incumbent person where you benefit from regulation, like a lot of companies like regulation. If you're the big boy, regulation protects you. It's like a moat
Right.
that keeps others away from you. So I would be more concerned of people who are very entrenched and benefit from big government. Like that's where I think the pain can come. And stodgier companies that are not as willing to kind of move into new tech. Because it's like with the internet. If you didn't embrace the internet, like you were run over. So that's where I think that the risks come.
The other element I think about green energy, stuff like that, there's been a bunch of stuff in there that I think is already starting to show early weakness. At least you only trade to the upside though, right? You don't fade stuff.
Yeah, if I do, like I'll do it through puts. Like I don't like being short typically. I'm not like a short
Yeah.
guy.
Yeah, I'm reckless. I don't care. Up, down, sideways. I'm here
It's
for
my
it.
mind. Like my first year trading pro was 2008, and like I made good money that year, and I traded long the whole year. I don't know what I would have done if I would have traded short, but I just traded long. It's just the way my mind works. So
Yeah, yeah. Which is,
like
I
we
mean,
said
that's also
before,
just
like why fight it? If you know what you're good at, like don't
yep,
like,
yep.
so
And I think something though like AI.
mhm.
AI has the ability to quite literally transform. I mean, most industries to some degree in some way,
Yeah.
even if we're talking things like HR process, whatnot. What do you think this does to labor force? And what do you think that leads into over the rollout of AI?
Yeah, I think everyone's worried about it, but if you look back at like most technological revolutions, it never really leads to like over, let's say, the intermediate term into any real trouble. Like people just start doing different
Reskill.
things. You know what I mean? It's like I don't know if you ever heard of Malthus's theory. It's like one of the early economists. Like they thought the world was going to have like peak population because there's only so much food you can grow. Well, yeah, well, like the amount of crops we get out of per acreage is like skyrocketing with better technology, so we could feed more people. So like I'm an optimist in that respect. The AI revolution is going to be weird compared to others because like I feel up until now, almost every revolution has like worked to replace manual labor. Like this is the first time where I think like white collar people are probably more like at risk because if anything, like if you're a manual laborer, it works to your benefit. Like it's very
Yeah.
hard to kind of replace someone who lays tiles in a house or something like that or in a building. So I think that's going to be tricky, which like people haven't experienced. So if you have a mid management job and you're 50 years old, it's like you got to start to kind of concern yourself, or if you're like what the future will be. Like you better be on track with what's happening. I would say for your own benefit.
I thought you were going to say that they were going to have to start working on the dance moves in case they had to go be a stripper, but okay, I
Well, there's
guess.
always that.
Yeah, it's a business. It's a business,
The world's
enterprise.
oldest profession. It's hard to replace that with a guy.
Exactly. So, and everybody has needs. Okay, so for everybody that's in the chat, if there's anything that you want to ask Matt, you could start throwing it in now. I have a couple more questions for him before we wrap in like 5-6 minutes. Um, the 2025 key themes that you have in mind, if you were to pick a few of them on how you're interpreting what kind of things you want to get into, you want to eyeball, you want to position into for 2025, what are those?
To me, one of the top is autonomous driving. I think it finally can come to fruition. And if you saw just recently, GM pulled their Cruise like autonomous driving program. So like it's basically a two-horse race. It's Google and Tesla. It's two companies who have the potential to change how everybody in the world moves. Like think of like the scale of what that can mean. It's like enormous. So for me, it's that's one of the big ones, is autonomous driving and everything. Really, to me, it's like an AI centric play. But the thing is, I don't know how it's all going to play out. Like new names come up, like Astera Labs came out, and they try and like speed up how like data transfers and all the rest. And so it's like just being awake. I think one of the themes that we're gonna have to that will be big is new IPOs, new young companies. It's been a very frozen IPO market.
Yeah.
Tie that in with like deregulation and a better market, I expect to see a lot more of that coming. So I think just being on the lookout for every company in every industry, like in fintech, I'm really focused on fintech, like lenders with a backdrop of falling interest rates and now like better models. I think they can have a huge upside move. Upstart is a stock I've been on for a while. Like they were big like last cycle and they got creamed with all that, but they've been coming back. They've been doing great. And it's interesting. I was reading like the company reports and they were saying like over the past 2 years, while everyone hated on the stock, they improved their models not more than expected. They improved their models more than they thought was possible. Like I think like up to 90% of their process is fully automated. Like start sprinkling on even more AI capability and data processing. That's huge. So autonomous driving, everything AI and how that's gonna leak through to things like fintech are like my big focuses going into 2025.
What about cryptocurrency, Bitcoin? I know that cryptocurrency might not be your direct bag, but it seems like there's a lot of things in fintech that are going to be able to play the game, as that seems to be a massive, massive initiative.
I like Bitcoin. Like I think Bitcoin is it's hitting critical mass to a point where it's gonna just like keep snowballing itself higher. But to me, I feel like everything else crypto related hasn't found the right product market fit. Like they're trying to make crypto do things that there's like like I like to read startup books too and entrepreneur books. It's like something has to be just good enough to keep its position. Like if you're gonna like dislodge like incumbent technologies and stuff, you got to be much better. So I feel like Bitcoin has caught the imagination, but everyone trying to do everything crypto. I don't know who else the winners are going to be. Like all these small coins and stuff. Like a lot of it is very scammy. So like I mean I'm long like MicroStrategy. I've been trading MicroStrategy. They actually just got into the Nasdaq 100, which is cool. So hopefully we're trading higher Monday. So still like pressing that through IBIT and the rest. But beyond Bitcoin, I don't see where the big theme is, or I can't see where the end game is for other crypto related things.
Well, the good part too is with something like MicroStrategy and Sailor's genius plan to just do convertible debt, so that the new people that are buying debt are subsidizing the existing positions. It's kind of really cool to see you just be able to make money out of thin air and just keep doing that. So I'm excited to see how that goes for him.
It's funny, like the way he explains it so like matter of fact that you can't lose because Bitcoin keeps going up. But
Wild.
it's basically just a really big leverage position, and I'm aware of it.
Literally.
Like I mean, if Bitcoin drops, like the company's in very big trouble. Like there's no special magic that he's found besides like leverage.
I know.
Like Eric, I have this amazing strategy that I'm gonna allow you to invest with me with.
Talk to
You can
me.
lend me a lot of money. I'm gonna buy a
Okay.
lot of QQQ because the stock market just goes up.
That's
And
facts.
so as it goes up, then I'll borrow more money and I'll buy more stocks, and the stocks will go up even more. Like, yeah, as long as stocks go up, it's a great strategy. We'll make a lot of money together. But if there's a problem somewhere, I mean, and like to be fair, like Bitcoin was down to what was like 15,000 like just a couple of years ago. So it's not like it's
Yep.
impossible for this to go down.
Right.
So, but that, when you trade long enough, you get cynical about a lot of things. So I try and balance all that. But anyways, it's just the way he talks about it is as if it's like a can't miss strategy. And
I know
I just see a leverage
that
position. So
that is the problem, because I traded MicroStrategy too, specifically on the breakout that it had in early November.
same.
And yeah, and I like, it's no problem, right? Like companies are gonna have ups and downs, but yeah, the fact that he intelligent leverage, like dog, what you mean, bro? Like,
It's not leverage, it's intelligent leverage. It's different. It's different.
um, all right, so there's a couple things I saw come in that I want to ask you quick. One of them is from Tommy. He says, "Are AI software companies going to get customers to pay?" That's actually a great point. So companies like Microsoft, Apple, CRM, Amazon. What do you think about that?
I think so. Like I think we have to move past I was surprised Apple had such a bump with their thing because like these like funny emoji or whatever AI, like to me that's nonsense. I don't think anyone's gonna pay for that. But if you can have things that are going to be productive, like help with productivity, like chat, like I pay $20 a month for Chat GPT, and it saves me a ton of time. I'm very happy. Like I find that way more
Yes.
value than so many other softwares that I pay for. So I think they will. I think we're early days. It's kind of like the parallel I would draw is like if you, I mean, I don't know how old Tommy is with the question, but if you go back early enough, it'd be like, would people really pay for like data on their mobile phone? Well, the early mobile phones, you couldn't do much with data. So the answer would have been like,
Hmm.
oh, why would they pay for that? But you have to kind of see how it'll snowball and grow over time and how one thing builds on another. So I think, I mean, like, look at how like minimum wages have gone up, right? And all this kind of stuff. If I can save you 10% of your time in a day, every day, you wouldn't pay me $25 a month? I mean, I would make that trade if you could save me 2% of my day every day, I'd give you $25 a month. But what's $25 a month? So like I think there is a big opportunity, but yeah, it can't just be, but that's the bad part about growth investing is that people will start like AI, and it becomes like this this fairy dust of like whatever like magic stuff. Like no, at the end of the day, it has to be a product something that drives value. But I do think they'll get there. Like autonomous driving is one. I mean, think of how many people would rather have an autonomous vehicle, once it's safe and we're all sure about that, over having to pay more for someone to come pick you up, make conversation with that person. Like I bet a ton of people would say, like, give me the robot at half price. I don't have to talk to anybody in the car. So
Well, that's also just because you're too nice. Because if I get in with like a Lyft or somebody and they start trying to talk to me, I'd be like, sorry, I don't feel like talking. I just tell
I'm
them.
Canadian. I have to be nice. It's a
I
part
know,
of
and then you got to talk to them about maple syrup and stuff. I get it. It's a big thing. I feel you. And then Bueller just wanted to let you know that he was very thankful for you hanging out. He said that you're funny. I think you're funny too.
Thank you.
And then Tommy says, would you pay $200 a month if AI improved your workday a lot? Yes. It's a
100%.
no-brainer. Yeah, that is a
100%.
no-brainer. I think a lot of people at this point, they have enough disposable income of some sort to be able to scrounge up something like that if it makes a big impact. And the other thing I think for AI on top of that is because it can be so scalable, that can naturally control some of the costs. They're going to come up with different tiers, I'm sure. Yeah.
Well, look, I
I think
mean, almost everybody paid. Like, everyone has their main car. How many people have a second car that they're paying five, six, $800 a month for, which that they're barely using, but that those few times where it saves you the 45 minutes to walk to a store, I mean, you're paying for that convenience for that time. Why wouldn't you pay $200 if it could maybe save you time, even make you more effective and help you to make more money at what you're doing? I would easily, I'd pay $1,000 a month if it's something that could help me be productive enough. I mean, why do people pay for Bloomberg terminals $3,000 a month? Because it allows them to be extra productive with their trading. I mean, it's 100% that would do it.
Yeah, definitely, man. Dude, as always, it is an absolute pleasure hanging out. Like I told you, we can talk a little bit more, but I'd love to set up something like maybe monthly or something like that, just to bullshit, see what's going on in the world. Because it's always a pleasure. You balance me out. You're a nice person. I'm not. So it's good to find my way around good people. It helps reform me, I think. So thanks for hanging out, man.
Anytime, man. Always a pleasure.
For anybody that wants to get a hold of Matt, you can go to his website. I think that's the main landing page for you now, right?
Yeah,
CarusoInsights.com. Is that right?
CarusoInsights.com. Yeah. There's
Yep.
I'm also on YouTube. I've been trying to get some different videos out, so you can
Oh,
find
yeah.
Caruso Insights there as well. We're on X, Trader_I'm Caruso.
Beautiful. And then on X, do you X or do you tweet? What do you do on there?
I X. I try and be pro Musk. I'll say I X instead of
I
tweet.
just don't know if we've moved from tweeting to Xing. Because Xing just weird, right? Like tweeting makes
It's
sense.
supposed to be posting. I think
Oh, is
the
that really
official
what it
term
is?
is it's a post now instead of a tweet. The official term.
Literally did not know that. That makes way more sense. I think everybody like me, we're just dumb because it used to be Twitter. So you tweet and we're just applying it
Yeah.
rote methodology. Yep. Some smooth brain people like me. That sounds right. Well, thanks everybody for hanging out. We will catch you guys all another time. Be an outlier, and we'll see y'all later. And we are off.
Awesome.
Beautiful, dude. Dude, super, super fun. Thanks for coming to hang out.